1212.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special.
1212.
To hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special?
Yo.
Take back control of your investments.
Afternoon, Thomas.
Hey, Andrew.
How's it going?
Hey, Thomas. How are you?
Very good, how are you?
Hey, awesome, thanks, mate.
Agua Jamaica. How are you, boss?
Hey, Luis, ¿cómo estás?
I'm good.
Very good.
How are
Good
you guys?
afternoon.
Hey, what's
Hello,
up, Kai?
You alright, Lewis?
Hey, Thomas. Me and Kai yesterday spent 1 hour after, probably 1 hour after you closed the Zoom, talking about economics and stuff here on the voice channel.
Yeah, I've saw it that you guys started the...
I told you we were talking about the October 7 and what happened on that NFP, the 6th of October.
Yeah, 6th of October NFP. Yeah, completely the reversal of what happened, on the Israel attack.
Lewis, did you tell Thomas about what you found out with how they sold, they bought before the weekend, and then obviously when the week started, when the war started, it just shot up?
Yeah, the 200,000 shares before the war. Yeah,
crazy. So they
Yeah,
would have known
that-
before the war actually happened.
That is
Yeah.
manipulation at its purest.
Hello guys. Kurvas. Hello.
Hey, Mr.
Hey,
Pirogi.
guys.
Hello guys.
Oh.
Thank you for the call, Tamas. I need something like that.
For what?
Make profits today. No, the gold buy.
Oh yeah, that was good. GJ was stop loss hit.
Yes, but I was in the buy since 2004 and it works out very well.
I know you're in Dubai.
Sorry?
I know
Sorry?
you are in Dubai. I know you are in Dubai.
Yes. Into Dubai. Into Dubai. Yes. Because I'm almost lost my account. I was down. No, I was down 8.5% and now slowly but surely come back. Come back.
Are you on FTMO?
Yes, on FTMO, brother.
Because someone said that they stopped paying out for 2 days.
8%.
I don't know. I have no payout. We can contact Julian about that. He's the man with the big payouts.
Oh yeah, fucking hell. In January he took like 40,000.
Yes. But 2 days ago he wrote in the chat after that he's been a little bit too greedy and lost almost one of his accounts, but he can reverse it and now he's back in profits. I'm
Yeah,
very happy for him. He's a good guy.
Yeah, he is. And you know, I think maybe it was him who mentioned that he was in loss for 2 years and then he reached the breaking point, the changing point. Not because, you know, he's a member of AlphaFX, but maybe there is a correlation, who knows, can't confirm it. But basically for 2 years he was in a loss, and literally within a month all the losses just gained back and he was in profit. But you know, that's all you need is one good bull run or one good series and you're fine. But the problem is that it's so easy to lose everything.
Yes, I will tell you something. After I reached my account, I have one good week, and then I have to do a lot of stuff about the move to Dubai and things like this, and I'm take the trading not serious at that, you know. And I have losses, then a little bit of win, and it starts. It's a series, and it's go down, and then my risk management is fucking hell. And then I'm talking to myself and say, okay.
Adrian, but you know, when you have such a big event in your life, like moving to Dubai,
stop trading.
Exactly. If you have anything,
stop trading.
If you have relationship issues, if you have work issues, if you have, you know, something outside stress, you should not be trading. That's in my opinion.
Yes, and now I'm back on the charts. I make my things. I control my risk. And I have one big problem. This is the emotion. And for me, it's worked very good, the set and forget strategy. You know what I mean? This is... I cannot watch every tick on the chart because then I'm going nuts. Crazy. That's what I told. Maybe, baby.
And we have a special guest today.
Go on. How are you today?
Hello, Bence. Big G. How you doing, brother?
Is it Sam?
Yes, I'm doing really good. To be honest, I looking to trade the London session. My expectation was some downside movement on dollar index because it left some imbalance. And yeah, it's still up, so let me see what the news bring for us.
Yeah, absolutely. I haven't traded. You know, actually, I did trade the London session. We were in a buy with the team on gold. Let me just quickly see. So this is what I shared in Discord. There was a GJ short, there was a stop loss hit, but the gold is actually running okay. It's just started retracing now a little bit before the news. I'm gonna hold the two positions because, you know, these are only small lots, so I'm gonna hold the two positions. But let's talk about it, how we should trade PPI. And Bence is going to help me analyze because he's very good with technical analysis. No surprise, he bought two Lamborghinis. Let's.
To be honest, I just spent my previous 2 hours with cleaning. Big boy problem.
You spend all your money on that fucking car. You know, fueling that is just ridiculously expensive. Okay, today we have PPI, which is a producer price index. 27 minutes. I'm sure we can do the analysis. Now, PPI is the producer price index, so it is also another kind of inflation index, but the difference between CPI and PPI is that CPI measures the change in price of goods and services from the consumer perspective. PPI does it from the producer perspective. So any raw materials that goes into production, whether it's material or service, it tracks the changes of in price of goods and services. So if you have the supply chain, the consumers are at the very end of the supply chain, but the producers are the very beginning. So it's actually a leading inflation indicator, whereas CPI is a lagging inflation indicator. So I'm gonna quickly go through on the analysis on how I see or how I should how I trade PPI, and then Bence is going to show his view on gold. So because PPI is a kind of like an inflation indicator, is the same thing that we need to determine whether it's inflationary or deflationary. So if you look at the gold chart, read the narrative because it's important. And if this PPI data comes out higher than expected, that is inflationary, because that is a sign of an overheating economy. When prices going up, businesses are booming, more money is floating around in the economy, and thus it is inflationary. So higher PPI, and I'm writing it out on the chart, is going to push down gold. Change the border. There you go. Higher PPI, sell gold. A lower PPI, on the other hand, is a sign of a contracting or cooling economy, which is good for gold. It's bullish for gold because it gives less reason for the Fed to continue holding interest rates higher for longer. One data isn't going to change the whole world, but the market is most likely going to welcome this kind of change to the upside. So there you go, full analysis. What do you think about it, Bence?
Yeah, absolutely. And also, if you check the technical side, you can see on the left side, the beginning of the week, the momentum was extremely strong. So there is so many orders, was only sell. It's called my technical analysis imbalance, what the price fill up just matter of the time. But I think depends how they want to play with the price, but I think possible first they are pushing the price basically where you expected, and after it's start to pushing to the upside. That's my expectation. Because if you check the currently move, you can see the price create consistently higher highs and higher lows. And below every lows there is a liquidity basically. So I think those liquidity will be taken out. So basically we can, what I'm expecting, maximum 50-60 pips downside movement, and after the continuation to down.
That's interesting you say, because that lines up exactly 53 pips, the daily pivot point, and the weekly pivot is at 2027. So that would confirm, in my opinion, in my technical analysis, exactly what Bence says. Maybe a push to the downside, grab some liquidity, and then shoot up. Where is the top? Who knows? There is a descending channel, which you can see. The top would line up with the Fibonacci. Fibonacci, let me just check quickly. Yeah, about these between 61.8 and 78.6%. But long story short, I'm expecting some upward movement. But first, before we continue, let's check the data. The PPI forecast today, core PPI is set to be decreasing, which, if you remember, if the PPI is lower, then it's going to be bullish for gold. So the forecast is already pointing to a bullish movement on gold. The leading PPI is also decreasing, which again, if you read the narrative in the chart, both of them, the forecast is saying that gold should continue higher if this is the case. If it's mixed, maybe then we're going to have the sell the news and buy the effect type of scenario. Bence, do you have any open positions?
To be honest, I have one sell from 2031.90 sell on gold. You know, like what I show you beginning of the week.
Yeah, I remember.
The move basically, it was quite similar scenario. You know, if you check the clear structure on the H1, basically the price takeout. I really like to take trades those points where is the liquidity, because we know exactly. So that case was the previous lower high above the liquidity where the price first shoot up. There are lots of buy order activated, and after boom, shut down. So I keep that trade. Of course, I take mostly. Yeah, now I have only that one. In the morning, I took a buy on Euro USD, but to be honest, that came back to break even, and after I don't try to take another one. So yeah, but I looking take a buy that position at that price where I told you, so around 1,000. But of course, it's a little bit risky because the price can be gap easily your stop loss.
Yeah,
So,
and we don't know what the data is going to be, so
yes.
all week is just pretty much guessing. Like last week, Benza was talking about the CPI trade, where there was a massive sell-off. We did catch it. That was a really, really nice and easy trade. You can see this. I think it was like 300 or 400 pips. Yeah, it went down all the way, like 400 pips. I only took like 100 pips because I was out of the position. Make the money, take the money. But then it just continued melting, 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 because the CPI was so freaking inflationary. And remember that the CPI is a lagging indicator, PPI is the leading one. And it just sold off. But now this week, it was a bit more complicated. If you remember the jobless claims yesterday, that was an absolute shit show. In my point of view, I interpreted the data incorrectly because I was I had a sell bias, but gold just wanted to go higher and higher. But it wasn't going up that much, so it was only like 100, 130 pips. So considering what happened in CPI and the jobless claims yesterday, two different worlds. So today, maybe yes, on the fundamental perspective or fundamental point of view, if you look at the forecast on PPI, both of the forecasts is pointing to deflationary data, which is bullish for gold. And if you look at the technicals, we are day trading above the daily pivot. We are back in the descending channel. And yeah, it confirms in my interpretation that gold should move a little bit higher with maybe a pullback to the daily pivot. Who knows? But for that reason, we entered already in the morning for a cheeky long. Is it going to work out? We'll see. This week has been a bit dodgy on the markets. What do you think? Gold pump or dump?
I have no thoughts. I'm out of the position and I'm only observing and learning for me at the moment, because all depends on the data.
Do you have a restriction on your funded account?
No, I have a swing account, a 100k swing account on at FTMO. During it or placing a new trade at news events is no problem at my account. But I need the money, and for me, safe haven, you know.
Now that you mentioned that, Thomas, you know, say if you do have a restriction on your account around news, I didn't have one because I was with FTMO, but now I'm with a different company. I do have a restriction around news now. So with, obviously it depends on the news event, but with PPI, do you kind of see a continuation of the news on gold? Or like, I don't know, I'm not too sure. So like, because I'm trying to gauge on whether I should wait the 2 minutes, then enter to expect a continuation, or is it just completely like, you don't know.
So what does the continuation represent?
So if the PPI number comes out lower and we expect gold to go higher, will we expect a big retracement after, say, about 15 minutes, or will it just keep going, do you think, with PPI?
So the trend that you see on the chart can show many things. I'm not saying that you can see everything in the chart because that's bullshit, but the higher highs and higher lows that what Benza was saying is actually representing the market sentiment. Whether it's retail or institutional, doesn't matter, because, you know, it is the market sentiment. You can't argue with that. So looking at yesterday's data, jobless claims came in quite mixed, but the market interpreted as deflationary data. Hence gold was going up, and it continued to go up. And if you look at the PPI, which is forecasted to be deflationary, core PPI 1.6 versus 1.8, headline PPI 0.6 versus 1. Both of the numbers forecasted, PPI is deflationary. And that market sentiment is taken from yesterday to today, and hence gold is pushing higher and higher. This is why I entered into a long position and we were in profit of 20-30 pips. Now it's retracing a little bit because it's normal at news. Maybe it's going to sell off if you have a lower data. If you have a higher data, who knows?
So, with the PPI, how come you're looking at the year on year? Is it because there's more of a major difference between the numbers? Because yesterday you mentioned you really focus on the month on month. Or is it different with PPI?
I didn't even have year on year on my investing.com.
Yeah, neither do I actually, now that you said that.
What I was looking at, I was like, where is this?
You have to select, I think because the year on year is 1 star. Yeah, you have to select the importance. You have to look at both of the data, but the PPI is so insignificant, the change, so it's almost no change. But
yeah, could that be seen as deflationary?
Yeah.
As seeing much change?
On month to month, it's actually inflationary because if you look at the number, it's increasing by a 0.1 percentage point. What is the...
Even though it's not a lot, it's still better. So,
but actually, the month-to-month PPI also shows a bit of price increase.
Yeah, that's why I was a bit uncertain on how come you're looking at the year-on-year figure.
Simply, I wasn't. I would just forget to look at it. I was focusing on the numbers I wanted to see.
Okay.
Yeah, right.
It's a common mistake, isn't it?
What?
Yeah, it is, definitely.
Guys, I just put something on the chat. It can be helped sometimes. It's called market sentiment. You can have a look on my FX book. Alone it's not enough, but it can be gives good confirmation when the technical side go against most of the people. So for example, if someone on gold, it's almost 50-50, so it's not really help in anything, but sometimes you can use this page because your technical go against most of the people. Basically 90% of the people looking to sell and 10% looking to buy, and you have a buy opportunity. It can give more confirmation because we know exactly most of the people looking to sell. Where is the sentiment side? Where is the market?
Exactly,
Does the institutional buyers look at the market as say if they see a big NFP down candle, and obviously say PPI come and mitigate that candle, would institutional traders look at it like, oh, we don't want to see price go above the NFP price down movement, so if once we mitigate that, we'll just sell off? Do they look at it like that?
It's different for institutions because institutions trade with something called the inventory. So sometimes they have assets on their inventory, whether it's it's not costly for customers, but it's kind of like inventory that they need to sell. So maybe they purchased a whole bunch of gold mining stocks or ETFs or something that moves the gold market. Or maybe they have not physical gold, obviously, but that's for the London Metal Exchange and all the metal exchanges. But if they have any gold-related derivative and it have their in their inventory, they always look at the future because markets are always forward-looking. So if they, for example, want to get rid of that inventory because they think that in 6 months or 4 months when the Fed starts to cut interest rate, or not, or maybe they're going to not cut interest rate, but long story short, if they want to get rid of the inventory, that's when they offload it into the market. So they look at the market a bit different way. So maybe they're looking at, when you're looking to buy, they're looking to sell, exactly because if you're looking to buy, they can sell at a higher price. It's simple supply and demand, just like a business. So it's a bit more complex when it comes to institutions.
So they don't really look at, like, obviously you see that big down candle there, that was, well, if you go on, so say they don't look at like previous price movements and then
they do, but it again, it depends. Are we talking about commodity exchanges or companies who have exposure, for example, gold mining companies, because they always take the opposite position. If they have a massive amount of gold inventory, they always short the market because the difference is going to give them premium. And they also have to protect with options contract and futures contract for any price movement that they think. They have a different view to production, to how much they can mine, and maybe it's conflicting to what we see on the chart. But it depending on who you're focusing on, whether it's a hedge fund, long or short, or just long, whether you're focusing on an asset management company, or even private banking, who are offering customers to buy physical gold, or it's so many things you need to look at. So when it comes to institution, you have to be really specific. Like, okay, I'm talking about Barclays Bank, but even that is just way too broad.
Okay, thank you.
Benza, do you have any open positions?
To be honest, I set buy limit at that point, what I told you, 2001.
2001.
Yeah.
That is exactly my stop loss. Okay, what I'm going to do...
I hope it's exploded to the upside.
Benza just scared me. I have only 2 small positions, so I can move my stop loss. So if you look on the chart, it's 29 pips, minus 590 pounds. I move the other one, it's minus 29 pips, 588 pounds. At 2001, oh shit, it's still 2001. Okay, let's move a little bit lower. It's still below 1,000. I like to keep my losses below 1,000 pounds. And, the wins, if this one works out well, then both positions are going to pay around 3,000 pounds. So it's like a 1-to-3 risk-reward ratio. And let me just... Where are you looking to buy? 2001?
Mm-hmm. Yes. I'm using almost 41 pips for the stockings.
Thomas, correct me if I'm wrong. With the
You never wrong.
With the rules of the with the rules of the 2 minutes with the trading, do you think it's just better to just completely sit it out? Because then you're just kind of causing yourself, like, I have to wait 2 minutes, then I can get in. It's just kind of psychological, better thinking to just, if you have restrictions, just maybe leave it out. Am I right in saying that? Or
say it again, sorry.
So obviously, if you have a restriction with trading news, do you think as a whole you should just maybe just leave news trading?
If you have a restriction on a funded account,
yeah,
well, you have to, because you have no other choice.
Yeah, that's what I mean. So and then there's no really point of chasing the price after the 2 minutes, because then you're just opening yourself up to...
No. It's what if you see there's a... Do you remember we talked about the concept of standard deviation?
Yeah.
So CPI, it was a big sell. This one right here on the chart.
Yeah.
And if you look at, lower time frames, when price started dropping, well, obviously in 15 minutes, massive candle, but within that 15 minutes, if I go down to a lower time frame, you can see that the first 5 minutes was only 141 pips, and then it dropped 400 more pips, or 300 more pips. So you can still enter, you don't have to, it depends on the situation, the data.
It just depends. Yeah.
Exactly.
You can't really front run positions with restrictions, because if you want to exit, you have to wait 2 minutes as well, isn't it? So
I guess you'll have to lower your risk if you want to try and front run it.
Yeah.
Just so you can have at least something. Covers the FOMO as well.
Yeah, I guess, yeah. But then your stop loss
better, better stay out. If you have a move like this day, 300 pips to leave the position, you have to martingale the account. So better stay out. I wait my 3 minutes, and then if I have opportunity, I enter.
Oh, okay, fair enough. So you have restrictions on trading news as well, Ricardo?
Yeah. 3 minutes before, 3 minutes after.
Okay.
Muhammad Ibrahim says he joined and not received a link for paid members. You did receive, because it's all automated, but drop me an email and I have a look at it. But if you haven't received the email, make sure you check your spam folder, because sometimes it lands in the spam folder. Who knows why? Technology in it.
Thomas, can you give me an example on what would be buy the news, sell the fact, please?
jobless claims. When you have conflicting data, so by the news, if the initial jobless claims is higher,
Okay.
that is a deflationary data, but the continuing is actually inflationary, because many people focusing, oh, so many people went in unemployment last month. But the reality is that you look at the continuing jobless claims, and it paints a different picture.
Right, okay, thank you.
Bad news, sad effect.
Are you actually getting in though for the buy and the sell, or is it just a term that you use? Wait for the buy, then enter the sell.
Take the profit and then sell.
Yeah, you can do both.
Okay.
So like you'd buy in the spike of the news, and then take profit and then sell the fact at a higher price.
Okay.
Kind of just like if it was the opposite way, it would be buying at a discounted price.
Yeah. So sell the news, buy the fact.
Yeah. Which played out really well last week.
If you're not following Ben KobenFX, I highly recommend you look at his Instagram. It's absolutely, it's outrageous, like the celebrity lifestyle.
Is that Bent? Is that Bent in the Zoom? Yeah.
Yeah.
Sorry, what's your Instagram, Bent?
It's there is it. It's below the video. Is a very good guy. I know him for many years. We grew up together in a small town. We had no money, but look at where we are now.
Yeah. It's the best way.
Dang. Made the move to Dubai.
Yeah, life is great here. Sun is shining. Sometimes it's a bit crazy, right?
Oh, Rajbanks and Wood.
Come to
That's
Dubai.
madness.
That sound is amazing.
Come on.
Hey, Habibi, come to Dubai.
All right, ladies, 4 minutes, 35 seconds until PPI. Look at the chart, read the narrative. If the PPI comes out lower than expected, gold is going to push all the way to 2015, hopefully. Because a lower than expected PPI is a sign of a cooling and contracting economy. That's what the Fed wants to see. That's what traders wants to see when it comes to, higher gold prices. But if the PPI comes out higher than expected, that is a sign of an overheating economy. Remember that PPI is a leading inflation indicator. CPI is a lagging, obviously, because it tracks the past movements. But PPI can predict future increase in price and services, because the PPI is at the beginning of the supply chain. Producer price index tracks the change in price of goods and services at the beginning of the supply chain, but CPI is at the end, the consumer side. Three minutes. Get your credit cards ready.
ليش كذا اللابتوب انا مرفوض وين شنطتي؟
حبيبي
كرسيين الواحد جلس
والله يلا. What? Okay, I'm going to meet her.
The lady is going for the bank card. They are filled the profit already.
I thought she was ordering food.
Yeah, they are ready for shopping already.
Ring the market makers.
Okay, we have 1 minute, 2 minutes until the data release. I'm in a small buy position since the morning with the gang. PPI comes out lower than expected. Gold is going to further continue higher. And if PPI is higher than expected, gold is going to plummet. This is macroeconomics. This is how the market works. It isn't trend line that's going to determine where the market is heading or where price is heading. It's hardcore data, which we don't know obviously, but we can have a good educated guess if you follow the gold market and the US economy. So. Lyrics 2-5.
Sorry.
Go ahead.
Will you be looking at the year-on-year figure as well as the month-on-month today?
Everything.
Okay.
Everything. I will look at the numbers I want to see.
Yeah, alright. Thank you.
1 minute, ladies and gentlemen. "45 seconds.
Mm.
31 seconds. Remember, PPI higher, sell gold, PPI lower, buy gold, but this is not a financial advice. We have 20 seconds to go. We have 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. And the PPI came out.
Higher.
Hold on, what is the PPI?
Higher.
Much higher. So I'm going to close down the gold buys. And it's pushing up from bets. Look at that. Price is at Ben says buy limit. Should I buy with Ben? Ben, did you buy?
Yes, I did, but you leave it.
Yeah.
No, I'm going to enter into a sell.
Wait.
Because
Oh,
PPI
yeah.
came out higher. So my trading plan dictates that if the PPI comes out higher, then it's a sell.
Mm. Yeah. 1.0.
Well, glad I closed my buys.
The TP should be, you know, previous lows, which is going to be like 1987, something around that price level.
Mm. Hey.
Go with you, Thomas. Let's see.
Yeah, help us push the market down.
Yeah, and Benza, enter with 100 lots. Push the market down, please.
Okay.
Thank you, sir.
So just let's have a final look on the data, make sure that we entered into the correct position. Core PPI, both of them inflationary. PPI, headline PPI, both of them inflationary. Higher than expected, higher than the forecast. Yeah, it should
Dollar
be an easy
index
sell.
Dollar index was obviously broken up.
Thomas, I know we're looking at PPI today, but with the housing starts data, it's coming at minus nearly 15%. How do we take that information on for the future?
So the housing starts obviously in January because the weather. There isn't. So you look at the building permits as well. That gives you a better, full picture. about what's happening. But the housing starts, you know, there's not many building starts, you know, in January, especially in the cold areas.
Right.
And I think the volume is going to arrive at New York Open. Virat is asking if I trade on a funded account. No, it's a live account. So the way to differentiate demo account from live account, if you go look to the left where the account is, then you can see that there is a gold or orange figure. If it was green, it would be a demo account, but it's not.
I need a wider monitor, man. There's too much stuff to look at.
I've just got 3 connected all together. It does the trick.
Yeah. iPads up, phones up. Stupid.
I trust for Thomas, so I just close it, break even, and let's see.
Maybe you were right. Maybe the technical is going to take over.
I don't want to fight my friend.
Yeah, you know, this week isn't my week, so I had you know, financially not big losses, but many stop loss hits. GJ especially, that was a cunt.
GJ, it's moving crazy the past few weeks. You just always need to buy.
Yeah, any opportunity.
Yeah.
I love GJ.
Thomas, don't you say that fundamentals kind of override technicals anyway?
Yeah, in my opinion, yeah.
Yeah, okay.
On my experience. Because, you know, if you ask yourself what drives the market, a trend line or financial data, economic data, well, the answer is easy. But when there is no data, then technicals are going to control the market. There's no question about it. And Ben, KobenFX, is very good with technicals.
Yeah.
Ben said, did you move the market now? Because it's dropping.
Yeah.
Yes, I told you. Actually. I told you I'm going to sell with you, so.
Good. So you entered with 200 lots.
Yeah, it's ready to go down.
Oh yeah.
BB.
So I entered 3 minutes after the news.
That's okay, yeah.
Should be alright.
Yeah.
Oops.
Ready to match.
Music.
Everybody hop on.
Oh,
There we go.
There she
13
comes.
40 pips. And I haven't even entered at the top. Imagine people who entered at the top.
Yeah.
Good. We are making money.
Up 2% today for the funded. Not too bad.
That's
you hear
good
that?
enough.
Pardon?
Yes. What is it?
It's
Cash
the money that's coming in.
My first withdrawal from this funded account is copying your idea, Thomas, and I'm sticking a wad of cash in a picture frame next to my head on the wall.
Oh, yeah. That's
It's
the one
such
I have
a
it
good
framed.
idea. It's so good.
Yeah, I have it on my desk actually.
It's brilliant. So good. Just hope like it's gonna be in my window so people will be able to see if they look in. But if they want to take
that's a bit obnoxious.
Yeah, no, it's free money.
Yeah, come rob me.
Yeah. They do say you should carry around, if you have bad habits with money or a bad relationship with it, you should carry around a decent sized chunk in your wallet. And if you lose it, you lose it. If you get robbed, you get robbed. It is what it is. You just carry around that money, and
yeah,
makes you feel a different way.
Okay, position is going okay. It started to melt, but it's waiting for some more volume and liquidity. Thanks to KobenFX, who entered with 100 lot, is pushing down the market. The real market maker is KobenFX. Those who would like to join the alpha community and get, you know, the same kind of good discussions, planning, and, you know, morning briefings and live trading, there's a Valentine's Day sale So if your Valentine didn't work out well, you can join the Alpha community for the old price of £199, and we can watch the market together. What could be better than watching an aging bald man every morning and every afternoon to make money?
Not a lot.
Pure fun, Monday to Friday. Come on, guys,
Yes,
hit the
best-
like button.
Best community, Urada. Thank you for that.
We're the best people, and I'm so glad that I met you guys.
Thank you.
Vice versa.
Aww.
That was
Come.
so cutie.
Yeah.
You know, it was GobenFX that put me onto you, Thomas. You know that?
No, I didn't. Know.
Ricardo.
But now you.
Ricardo.
Hello, my friend.
How do you do? You're good?
Yes.
Very good.
Ricardo
I'm running
promised
my
that.
position.
Ricardo promised that if we make money today, he's going to cook dinner for everyone. He's a chef, by
Let's
the way.
go. Come to Dubai.
Yes, Ricardo.
No, man. You are too far, too far. P-Plant, I don't know what it is. Dubai is way, way, way far.
Hey, Habibi.
But I
come
was
to
in the same
Dubai.
situation.
No, nobody come to Dubai. Dubai is full. Stay out, guys. Leave. Lot of traffic. Okay, Punanis, I call it a day. Wish you a nice weekend.
See you next week, brother.
Yes. Enjoy your
Yeah.
weekend, guys.
Have a
Goodbye.
good weekend, everyone.
Come on, Gold. Benzer, are you in profit?
Yes, I am.
Very good.
Very much.
And make sure you follow Ben on Instagram.
Is this going to be a reoccurring thing now, Ben, that you're going to be joining the Zooms? Ben, sir.
Yeah, he's been in the community a while, obviously. First time I've met you.
Benzer.
I think he's lagging.
I know, he's probably wanking to the profit he made today.
Hello, Tamas.
Hello, Arslan.
Tamas, if consumer sentiment is higher than expected, can we expect a retest of 1980?
Oh, because we have consumer sentiment at 4 o'clock. What is it? No, it's consumer expectations. Yeah. So again, the same thing. You have to determine whether it's inflationary or deflationary. If people are happy and, you know, confident, that's not good for gold.
Okay.
Who is happy on these days?
We are.
Ross on YouTube, even though I don't like you, I have to give you credit, like, as you among those rare traders who admit when they wrong and flip the switch. How come you don't
What?
like me? That's impossible.
Yeah, you've never met him.
I'm the nicest person on earth. Outrageous. Now my heart is broken, truly.
I don't really think you can say that about someone without meeting them in person.
Yeah, he doesn't care about my feelings. It's very rude, Ross. you know, I was
What
happy.
a weird way to start a message. Say, I don't like you, but...
Yeah, it's a yes sandwich. And by the way, hi Mike, it's the first time you ever spoke.
Yeah.
I've been lurking.
And did you like what you saw?
Yeah, I'm really enjoying the group. Thank you.
And I'm enjoying your t-shirt. It's freaking badass. And by the way, are you that Mike McCready who does singing?
No, you're thinking of Mike McCready, who's actually related to me, he's the guitar player in Pearl Jam. I also work in the music industry, and a lot of people get us confused, but that's not me. And it would be very obvious as soon as you hear me play the guitar.
Okay. Well, anyway, nice to have you. Good-looking bald bloke. Another one.
Thank you.
It's something to do with trading. I've seen so many people have no hair in trading,
Stress.
or, you know, abusing alcohol or drugs or hookers. I don't know how was the correlation, but you know. Oh, 45 minutes on the New York Open. I think that's going to bring the real volume. Sir Knight is asking, no, he's saying he's going to fill back. We are going to back to fill the daily 2017. 2017? No, 2007 maybe. Yes, maybe there's going to be a retest. You know, there's usually always a retest when we have, and this is why you bring in technicals when you have a break and then a retest. Well, obviously we started going up. So that could be a movement back to, you know, somewhere around here, and then continuation lower. That's the retest. Many people were stopped out or afraid of the retest, but the retest is just another opportunity to enter. And anything is possible.
What's interesting on this data release is there was no major wick above the recent sort of structure just above. So there's liquidity rest in nicely. 2008.
And guys, I'm going to say goodbye. The trades is set, stop loss is set, and the price should continue lower. But again, remember that we have consumer sentiment or consumer expectation data at 4 o'clock, which you know, can flip the market. So make sure that you watch out and follow this data. If the data comes out higher than expected, then gold is going to continue lower. If it comes out lower than expected, then gold is going to reverse, and 2017 is on the table. So it's up to you now to monitor the markets. I did my job. We traded PPI with more or less success. Now just waiting price and New York Open, but you know, I would rather spend the time with my family on a Friday afternoon. So thank you so much. It was an absolute pleasure, and I wish you a relaxing weekend. Thank you so much, guys.
Thanks, Thomas. Good weekend.
Have a good weekend, mate.
Bye bye.
See you next week, guys.
Sal.
Sal, boss. Appreciate it.
Bye, Sal.
All right, and those of you who would like to join the Alpha community, head to the YouTube chat, because I just posted a discount link, because there's only one membership left for, you know, the regular price discounted, but there is a heavily discounted price in the YouTube chat for Valentine's Day. So thank you so much, guys. Have a good evening, have a relaxing weekend, and see you next week. This is the AlphaFX.